India's forex reserve crossed over $600 billion. Key things to know. According to the Reserve Bank of India, India's foreign exchange reserve has increased to $603.87 billion. Now, what are exactly foreign exchange reserves? Forex reserves are foreign currency assets held in reserve by the central banks of countries. What are these assets? Foreign marketable securities, monetary gold, special drawing rights, that is SDRs, reserve position with International Monetary Fund, that is IMF, are few examples of these assets. Why countries keep forex reserve? So the primary reason for keeping foreign exchange reserve is to make overseas payments and to hedge against exchange rate risks. They also act as a country's backup funds in case of an emergency such as depletion in the value of home currency. These reserves are used to back liabilities and can influence monetary policy. Forex reserve provide a country with a cushion against economic instability and uncertainty and help attract potential foreign investment. It also makes international trade easier to execute since most of the trading take place using the US dollar. In October 2021, the country's foreign exchange reserve reached an all-time high of $645 billion. But following that, reserves have been falling. Why so? Because RBI was spending the forex reserve to defend the rupee against pressures generated by global developments. On July 21, 2023, RBI Governor said foreign exchange reserves have rebounded from $524.5 billion on October 21, 2022, taking into account India's forward assets. Now, if we see 10 years back data, as on July 19, 2013, our foreign exchange reserve was at $279 billion. If we see August 4th data, we have more than doubled. What could be the probable reason? Well, the growth was driven by strong export of software services, which was witnessed across key verticals such as IT services, business process management, and engineering research and design, supported by a rise in global capability centers. It is also because of the revaluation benefit as a result of dollar weakening and a decrease in US Treasury yields. What seems like the positive impact of growth in forex? India's forex reserve crossing $600 billion reflect the country's improved economic situation, as well as the RBI's watchful measures to safeguard financial stability. The current increase in reserve is like a positive indicator for the country's economic resilience in the face of global concerns. It also helps to provide a guard against external economic shocks and challenges and helps maintain the stability of the domestic currency. Additionally, it enhances the country's image and credibility, which can help attract foreign investment. Overall, India's forex reserve crossing $600 billion is a positive development for the country's economy and its ability to weather economic uncertainties.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.